What is going on, guys? So everyone and their grandma is talking about Intel stock. So I'm going to share my thoughts and what I think about Intel stock and why I don't see it as a buy, even though as a value investor you might see some value. And if you've been holding Intel stock for a while and you know exactly what's going on with them, it might be a great opportunity to buy because they haven't been this cheap in 15 years or so. So it is down bad, and we're going to go over some of the things that's going on with the company and why it's down bad. So let's take a look at that first. So Intel is doing layoffs. That's the first thing. So right here it says it's slashing 15% of its staff, part of a 10 billion plan to reduce costs. So these guys are not profitable and they're fighting everything to become profitable. This is supposed to be a growth company and it is not seeing a lot of growth. And let's see what the CEO says. Simply put, we must align our cost structure with our new operating model and fundamentally change the way we operate. So what does Intel do? It's a chip maker company. It is in a very, very competitive space. And right here, I believe it says, Intel also missed the AI wave. The chip maker is struggling to keep up with the powerhouse rival NVIDIA. So just being a competitor of NVIDIA is not a good thing because NVIDIA is absolutely crushing it and it's taking the market share. And there's also the Taiwan and China. There's a bunch of companies there in the chip industry. So it's extremely competitive. And so that's one big thing that's a huge loss. So they're cutting 15% of its staff. That's 15,000 jobs in order to get profitable. And the other thing is there's lawsuits, and it's also cutting its dividend. I don't know why they're paying a dividend. Let's take a look at the dividend. They're cutting the dividend starting Q4 2024 this year, and they were paying over 200% of their net earnings in order to pay the dividend. So they're actually losing money and going into debt just to pay off the dividend, which makes no sense. So it's a good thing they are cutting it. And then we have lawsuits. So I've been playing around with this AI, and it shows the resources, and I asked it how many lawsuits is Intel a part of, and look at this class action lawsuit related to foundry business. So Intel is facing a class of, okay, I'm not going to go through every one of them, but there's a bunch over processor issues, employment discrimination. And if you Google Intel lawsuit, you can just go through your picks. This is before 6 days. There's a bunch of these lawsuits. So that is hurting them in a couple of ways. It is burning more cash because all these lawsuits cost money. It has taken away the management's attention towards the lawsuits instead of getting profitable and growing their business. And if you look at this is supposed to be a growth stock. And if you just look at the financials, let's see how their revenue has been growing. The revenue is down year over year. Their earnings are down bad. We'll go into the balance sheet. But how does this look? Since 2021, yeah, right here at the top, 2021, end of 2021, the revenues has just been going down, and the costs are more than revenues. They're not profitable. And then if you take a look at this video, I believe this is Moomoo. If you don't use Moomoo, there's a link in the description. You get $150 free, and you get some stocks and whatnot. But so Moomoo gives it a fair value of $21, which is at what it's sitting right now. Analyst price targets is 33. It is selling at a price to earnings of 88. The 5-year average price to earnings for Intel, I believe, is at like 15, 20. So, and then boom, look at this operating data. The GPU market share is just falling. These guys have been around for a long time, and the new competition is just killing them and taking their market share. So if we look at this, the revenue breakdown, I haven't dug too much into Intel because I'm not going to invest in it, and I don't believe I will change my mind. We can see they missed the guidance, the estimate for revenue, they missed it big time for their earnings. The earnings per share is down for the last 3 quarters alone that we can see right here, EBITDA as well. And then if you look at the valuation, so price to earnings 88, industry average is 52. And then we look at the price to book, 0.7 times book value, 0.8 times book value. So this is why people are liking this and seeing an opportunity here, because the industry average is 10. So technically it could 10x, but I do not see it happening because the industry average is for growth stocks, I believe. And this is not a growing stock. I'm not bullish in the stock if you didn't notice already. 1.6 times sales, industry average is 13. And then if you look at this, so since 2021, revenues have been going down. And if you look at the institutional ownership, since 2021, it has fallen a bunch. And it is going up a little now. And then if you look at the stock price, it's just fell down insanely. So for day traders, short term, maybe there is some opportunities here, but I don't see it. This is a good opportunity for a long-term hold. And then if you look at the balance sheet, they have a lot of goodwill, tangible assets, and they have a lot of cash as well. They have 29 billion in cash, which sounds like a lot. But then if you look at Stock Unlock Insights, it says that they only have 27 months left of cash to run away. So when they run out of cash, they will have to dilute shares, raise debt, and whatnot. They have a negative free cash flow of $12 billion. So they have a little more than 2 years of the cash they have right now. And the one thing I don't like about the company is that they keep predicting like really high numbers, and then they just keep disappointing everyone and not being able to fulfill those numbers. Now, they might just be optimistic in the business, and then the other companies just take their market share and just do better than them. I'm not sure. Then if you look at the valuation again, P of 91 here, and the 5-year average is 18. So the price is going down, but so are the earnings. The company is not making money. And yeah, that's the main thing. Like we can see intrinsic value is what, $35 USD. And I'm just not bullish on the stock. I don't see this as a good long-term hold. And good luck to you if you do own Intel. Today's a good day. I guess you're up 2%, but overall it's not looking good. And thank you guys for watching. There's much better stocks to invest in at much better prices. Just like the video I'm about to post, I already posted. Ticker symbol SDLA, which is in a much better position and pays a 10% dividend. And these guys will no longer pay a dividend and are not profitable. Thank you guys very much for watching, and have an awesome day.